Good afternoon. Thank you, Sakurai-san, and welcome, everyone. Today, I have the privilege of introducing our guest, who is the CEO of the Japan Exchange Group. He's here to offer a view of Japan's equity markets and discuss the country's corporate governance reforms to improve corporate value. Mr. Akira Kiyota is the Group CEO of the Japan Exchange Group. So far, 2016 has been a very volatile year for both equity and debt markets. And there's been many different events, both in Japan and internationally, such as last week's decision by the Prime Minister Abe to postpone the consumption tax. There's been volatility in China. The US monetary policy, which is questioned all the time, what will be the timing of the next increase in interest rates? There's also negative interest rates in Japan and in Europe. And today, for the very first time, negative interest rates on German bonds. And then one thing that we all see every day, the volatility in the oil markets. And that's just a few of the different factors that we've been dealing with in markets. Kiyota-san's views about the path forward to enhance corporate value and governance, especially within this environment, will be of great interest to the audience this afternoon. And let me give you a bit of his background. Kiyota-san took over as CEO of the Japan Exchange Group in 2015 after serving as the president and chief executive of the Tokyo Stock Exchange, where he worked on issues such as extending trading hours at the exchange. He's the former chairman and CEO of Daiwa Securities Group, Inc., and currently serves as a member of the board of directors of the World Federation of Exchanges. For full disclosure, our two companies actually work together very closely. Most recently in April, we announced the introduction of the JPX S&P CapX and Human Capital Index. This co-branded stock index is designed to measure the performance of leading Japanese companies that are actively involved in capital expenditure and investments in human capital. Underscoring the interest companies have in physical as well as human capital, Nikko Asset Management just launched an ETF that tracks this index. Other asset managers also have plans to introduce their own ETFs, and given the market response, we're very proud of the relationship that we have with S&P and JPX. With that, please join me in welcoming a true leader and someone we're all fascinated to hear from this afternoon, Akira Kiyota. Thank you very much.
ご紹介いただきました JPX の Kiyota.
My name is Akira Kiyota, as being introduced as being CEO of JPX. Thank you for kind introduction, and I am grateful today for this opportunity to speak at Japan Society. As I have been introduced, Mr. Douglas Peterson and JPX and S&P have enjoyed a very close relationship, and we have had already some business relationship and some business deals. So it's so wonderful for Mr. Peterson to introduce me as a speaker today. Let me then talk about through my eyes of being a CEO of the exchange, I like to share my opinions about the recent trends and the development in Japanese securities market. I have worked at the Daiwa Securities since 1969, so for 44 years I have been involved in the private sector. But 3 years ago, I have been appointed as the president of a Tokyo Stock Exchange, and just last June, I became CEO of Japan Exchange Group. And currently, I'm putting all my efforts to improve an appeal of JPX, as well as the entire Japanese financial and capital markets. Today, I would like to talk about the recent market trends. Then, I'd like to share with you the reform efforts taking place in the Japanese corporate governance area. First, let me talk about the stock market trends for 2016. At the beginning of this year, we have experienced a substantial drop in share prices all over the world, and it was a rather tumultuous beginning of the year. Here, I list some factors contributing to such volatility. China's market turmoil. We have had a drop of Chinese share prices in August. I think it was past August, but then it repeated at the beginning of this year. We look into the cause of it, and the market volatility is not only by China alone. There had been some factors such as a drop in crude oil prices, or uncertainty in the U.S. monetary policy, or increased geopolitical risks such as increased terrorist activities. Speaking of a Japanese market, by mid-February, due to a rapid rise in yen, which was 123, down all the way to 115. And due to that, Nikkei average came down below 15,000 yen. Of late, we've had Ise-Shima Summit, which concluded safely, and our Prime Minister just announced the postponement of an increase of consumption tax in Japan by 2.5 years. So there are certain uncertainty in Japanese economy. Uncertainty of whether FOMC would increase the rate at the next week's meeting. We don't know exactly what may happen. And on the 23rd of this month, there will be a referendum in the UK whether to exit EU. This would trigger maybe the market turmoil starting from EU. So at the market, we have been all facing uncertainty, and we cannot see too much movement in the market worldwide. Also in the United States, there are some uncertain direction of the presidential election. I understand now that we do have a nominee of both parties. I not being a citizen of the U.S., and yet we are keenly interested in what may be the course that the U.S. will follow. When I have time, I would like to ask the Americans what you think of it. Now, would you look at page 3? Having said all, I am now comparing the stock price movement of the world leading market, setting the start of Abenomics, which started on November 16, 2012, as being 100. At that time, Mr. Noda and Mr. Abe, they had a debate, and they have agreed to dissolve the parliament. So on that day, I set that as 100 and tried to compare the share prices of the leading stock markets. Japan since then had increased by 80%. Even though the time is limited, within 3.5 years, we in the Japanese market, we increased the prices most. Even though China took over Japan for a brief moment before the turmoil of last year, and the price was going up very rapidly, but currently it is at the level slower than Japan. And the share prices in the U.S., Europe, and India also rose from the base point, yet at a more moderate rate.
Now, please turn to page 4. This shows the trend in Japan's stock market since last year. In last year, 2015, and on June 24th, the market priced 20,868 yen, And for the first time in 10 years, the Japanese stock market recovered 20,000 yen level. Later, due to the confusion of the Chinese stock prices, once again the Japanese stock market recovered the 20,000 yen level. But ever since, the stock market dropped significantly, as you can see in this graph. Starting in April, there was a somewhat rebound in trend, but still in the process of adjustment. And the trade volume has been relatively low. And the exchange rates had a very volatile movement. From 105 to 110 yen is the exchange rate currently. So overall, Japan is facing a high yen exchange rate. But from the U.S. perspective, it's not necessarily high yen because at the start of the Abenomics the exchange rate was about 80 yen to the dollar. So now it's a very high yen that we experience. But in recent trend, I think you can say that yen appreciation is relatively stably taking place. Next, let me touch on the trading value and trading volume. That is the number of stocks traded. And in the process of a volatile up and down of Japanese stock, in 2013 through 14 and 15, there was a very favorable trading volume. In particular, in 2013, right after the start of Abenomics policy, the first round of crude bazooka was introduced, and as a result of that, the investment in the world had a different outlook onto the Japanese market and rapidly increased the trading volume. Turning to page 6, and in the Japanese stock market, who is selling and who is buying? This graph shows the participation in the Japanese stock. According to the most recent data, about 60% is occupied by foreign investors, followed by the Japanese investors, individual investors, about a little less than 20%. And next group of participants, including proprietary trading by securities companies, and the Japanese institutional investors and buyback by the listed companies is only 6%. And therefore, overall, the foreign investors are the major players in the Japanese market. And the Japanese institutional investors have a very small presence in the market. This is something that we have to address in the future. So you can see the foreign investors are enjoying a very high share in the Japanese market. This is rare among other advanced countries. So that means that the Japanese stock market, although it is quite often said that the globalization is lagging, but when you look at the Japanese market with a high ratio of participation in the foreign investors, participants, foreign investors are the main player of the participants in the Japanese market. So I think it is indicative of the globalization of the Japanese market. Please turn to page 7.
As we look at the market movement, we'd like to see who are buying at our Japanese stock exchange. Let's now look at the trading balance. Because of a substantial increase of foreign investors, whenever there is a drop in share prices, they tend to blame foreigners doing the selling. But we are trying to always find a culprit. But as you can see here, since January of 2013, foreign investors overbought the Japanese market. So since the start of Abenomics, it was almost 15 trillion yen of overbought. So the foreigners bought a lot. So, of course, now that there may be some oversell when the price comes down. But we always want to blame somebody when the share prices come down. So in the declining market, we tend to talk a lot who may be the culprit. And I think in true sense, we are not globalized yet. Now, please look at this graph. Bars above zero indicate overbought situation, while bars below zero indicates oversold. So when the foreigners are buying, who were selling? These are usually Japanese individuals and Japanese companies. So when the Japanese were selling, the foreign investors were buying. However, foreign investors, some of them were oversold and some of them are overbought due to changes in the market. In 2014, we had a second version of Abenomics, and they began to start buying. Then faced with the China shock in August. Again in October and November, because the Nikkei average recovered, foreign investors began to buy, and then we saw the drop-off at the beginning of the year. Therefore, they are dumping them. So it is not that the selling of foreign investors caused the share prices to fall. Rather, no one wants to incur losses when share prices fall. Thus, everybody wants to sell. Investors trade with their own market hunch, whether they gain by selling or buying. So it is wrong to say who caused it. As I said, at the beginning of the Abenomics, there were many foreigners bought. And I think they found confidence in the Japanese market then. So about 60% of volume are being carried out by foreign investors. But let's see who owns Japanese stocks. That is indicated in the page 8. Since 1985, if we check the ownership by investor category, 1989, that's the peak of a bubble economy. It was the highest price of Nikkei, of close to 40,000. At that time, foreign investors only amounted to 5%. Currently, this is 1 year ago's data. We have about 33% of foreign ownership. So when the Japanese economy began to come down, the foreign ownership increased by 6 times. What is the reason behind that? At the time of 1989, it was too expensive. So many investors were just buying even though it was too bullish. So it really did not meet the actual value. So for investors, overseas experts would have bought the Japanese stocks then. But in 1989, we were going through the bubble economy, and therefore, foreign investors stayed away. We have 2 to 5 per year per share profit. PER at that time was 65 times. Current PER of Nikkei 225 13 to 14 times. With that, foreign investors are convinced they can find some Japanese corporations which are appealing to them. So when you look at the globally, the investment criteria had been behind at that time in Japan. But currently, I think we are now meeting up the requirement of the global standards. 1/3 of Japanese stock ownerships are by foreign investors. And if you look at the many listed companies in Japan, there are some, their ownership exceed that of Japan. JPX, not exactly half, but about 40% of ownership is by foreign investors. So Japanese management who do not pay much attention to foreign investors would not be rewarded because we have many foreign investors coming to Japan. At the same time in Japan, we see unwinding of cross-shareholdings. These are the cross-shareholdings by financial institutions, city banks, regional banks, and companies. So these are selling stocks in the market, and those stocks are being bought up by foreign investors. I will talk about the corporate governance code, but within the provisions, we are asking corporations to not hold shares of other companies, and we talk about strategic stock holdings. And that being the case, going forward, we will see more unwinding of cross-shareholdings between financial institution and a corporation, and between corporation and a corporation. And buyers will be domestic institutional investors or individuals or foreign investors. Therefore, you can easily understand why I strongly push to enhance the appeal of Japanese stocks, and I am really hoping the growth of Japanese institutional investors. At the same time, I would wish that the listed companies try to enhance the corporate value, which would make them more attractive. Let me now touch upon the trends for IPOs. Immediately after the Lehman Brothers demise, so-called Lehman shock in 1929, the number dwindled down to 19. However, with the recovery of the Japanese economy, we see a gradual increase. And since Abenomics, we see a pickup that the last year's IPO number was 98. While not clear how future disruption affects the market this year, it is expected that about 100 companies want to go through the IPOs this year. Whether this number holds depends on the market environment, but we can expect robust activities.
The importance of the newly IPO companies shows that the new companies which are being listed will be the promotion of the market. In 1980, the market was 38,915. And at that time, 600 trillion was the market capitalization in the entire Japan. And last year, 2,861. I mentioned earlier that we recovered 20,000 yen. And at that time, 6.6 trillion yen was the market capitalization. And the Nikkei average recovered to almost half of the previous days. But the market capitalization grew larger than that. The reason being that after the burst of the bubble, many companies disappeared from the Japanese market through the merger and acquisition, and some of them disappeared totally. The number of listed companies at TSE is at the peak time, that is when the stock price was peaked.
1200社弱でしたが、
about
今
less
は
than
1900 社
2,000,
になっている。
but
ということ
now
は、
it's
それほどたくさんの企業が
19,000.
消えているに
No,
もかかわ
excuse
ら
me,
ず、株数は
1,900. So it's
700社
not
増え
that
てい
the
るわけです。
disappearance of the company was not large, but the market capitalization increased. Many companies made the IPO entrance or the listed with Mothers and Nasdaq. And from that market, they were raised to stock first section and the second section. In 1980, the companies which did not list, the company name is SoftBank, and they listed at JASDAQ in 1994 and currently enjoy the third largest market capitalization in the Japanese market. So in this way, the emerging market made a tremendous leap in the Japanese market. So that's why IPO is important in order to promote the overall Japanese market. Next, I'd like to introduce the derivative trading. In January 2013, Tokyo Stock Exchange and Osaka Securities Exchange were combined to start Japan Exchange Group. As a result of that, cash equity is now allocated to the Tokyo Stock Exchange, and derivatives all are now handled by Osaka Stock Exchange. This is the reorganization of the stock market in Japan. The size of the cash market of TSE is ranked at the third in the world, but when it comes to derivatives, it's only ranked at 16th. So compared with the cash market, derivatives market size is very small. As Osaka Securities Exchange, they enjoyed the highest trading volume last year, so it shows the gradual improvement. But compared with the cash market, the derivatives market is relatively small in Japan. For one thing, in Japan, the people are rather nervous about the derivative market. Derivative products. So the investors are rather timid about getting into that. And also the understanding of the derivatives product is rather difficult. This year at JPX, as a new organization, we are establishing the Financial Literacy Support Division in order to promote the knowledge about the financial systems and products, so that we are trying to promote the education in financial activities among people, and also even among the institutional investors. I think that this will help the financial education among a broad base of investors. So how best we can increase, build the people's assets or without any impairment. It is an important issue in Japan to tackle going forward. The individual's asset base is 1,700 trillion yen. Half of it is deposit at the bank without zero interest rate. Even with a zero interest rate, the Japanese individuals want to deposit the money at the bank because they don't have good understanding about the investment activities. And therefore, the BOJ introduced negative interest rate. And even then, the interest rate of the regular deposit 0.001% annually, nominal rate. This is the means that 100 yen will be gains as an interest rate if you deposit 10 million yen at the bank for 1 year. So for the Japanese individuals, investors, salaries are deposited, transferred to the bank of their bank account. So when they want to draw the money from the ATM, it's 108 yen commission has to be paid. So the 100 interest rate that you earn with a 10 million yen means that if you use the ATM once, you will suffer the deficit or loss of the money. So many individual investors are not aware of that, but now we are actually in the middle of the zero interest rate age. So at that time, how to manage the fund or asset that you built in the past is very important. That is, it is essential for them to have a thorough understanding and knowledge about financial products. So in that sense, the new way of investment, of tools of asset building is the ETF that we are focusing upon. In order to build individual financial assets, it is, and also risk-return balance is well balanced. That is, ETF is the perfect or proper financial products. Also, including the derivatives use, we are trying to promote the financial knowledge and education among the investors. ETF has increased in the past 3 years after the introduction of ETF in 2009. It's not a natural phenomenon. I don't know if you may know, but the BOJ, after the start of the yen, has been supplied into the market, and the BOJ is buying each ETF as one of the purchase. And when the BOJ started the ETF purchase, the usage of ETF and the volume of ETF has expanded significantly. With the rapid increase of the ETF market in Japan, in a sense, maybe put it as unusual. It's not it will happen in every country, but including the Japanese individual investors, it is important to be well aware and understand the ETF and its effect. Investors are also gradually increasing in the use of ETF, and the balance of ETF has increased tremendously, but we don't know this BOJ's policy will indefinitely continue. U.S. is starting the tapering of the interest rate, and we will be happy in Japan if we can get into that stage, but it's rather difficult to swiftly change the Japanese financial monetary policy, but it will come sooner or later. So when it comes, it is essential and necessary to expand the ETF market before it happens. Next, I would like to explain about the Corporate Governance Code, which marks just 1 year this June.
For a long time, it has been often pointed out that the Japanese companies have a very low ROE seen from the foreign investors. As you can see here, that compared to ROE of world peer companies, Japanese companies do have a very low ROE. Back in 2011, ROE of Japanese corporations were about 4%, whereas others are 15 to 16%. I can understand why Japanese share prices would not go up. That being the case, for 26 years, Japanese share prices hovered around at the very low level. In 2013 and 2014, due to weak yen and low interest rate, and some new strategies being introduced by Abe administration, we began to see increased 8 to 9% of ROE because corporations are beginning to earn more. Yet it's still not at the level of other companies in the world. If you look at the long-term movement of Japanese stocks, that is also reflected in the next page. Maybe I should go back to the previous one. Japanese share prices had not gone up. And if you look all the way back, which is 1990, right after the bursting of a bubble economy, we have seen the 20% of a drop. Compared to 1980s, there is much more drop. So we have not seen the really big movement of Japanese stock prices, whereas the other stocks in the world are going up. So that when we look at the long-term trend, share prices hardly moved. Only it's good when you take from the start of Abenomics. So what's the reason for being so cheap? We can only answer that because of a low ROE due to a very poor capital efficiency. So Japanese management did not really pay much attention to capital efficiency. So hopefully now we are pushing for management of Japanese corporations to be aware of the investors and shareholders. Since we have so many of foreign ownership, and we do have about 60% of trading volumes being carried out by foreigners, we do have to reflect the global standards and to reflect what are expected of by foreign investors. So in other words, we would have to reform on the corporate governance. And it is said that so many people have said that the Japanese corporate governance should be improved, and therefore that would increase the share price. So for us, we have tried many measures. 12 years ago, 2004, we have introduced the listed companies' corporate governance principles. There's a stated governance principles, and back in 2004, you can see it in the red ink. So in order to enhance the corporate governance principle, some of the points. One is to introduce an independent outside director who satisfies independence criteria set by TSE. This does not have any penalty clause, so this was not exactly adhered to, but we appeal to the importance to corporations. Followed by the amendment to the Company Act. This was a law which stipulates that if a company does not appoint an outside director, then the company is required to explain reasons why. So the explanation is required. Also, the amendment introduced an establishment of a committee system, including audit and nomination. So this is especially audit committee was encouraged. Many Japanese corporations could not adopt the committee system, so that it was urged to establish the audit committee. Also, the amendment calls for and instituted a multiple derivative legal action system for any management. This is a very fearful event. But the companies which were not listed were not really subject to such action. So especially unlisted companies, if there were some problems, the parent companies would not be sued. But now we have changed through the amendment that all the corporations, be it subsidiaries or parent companies, will be responsible. All of the group companies will be responsible for corporate governance and subject to legal action. The Companies Act did not have a provision calling for an outside director, only asked for the effort should be made, but it was not a requirement. The TSE had rules stating that one must have an outside director, and if there isn't any, there need to be explanations for that. Last year, FSA and TSE worked together to come up with a corporate governance code which stipulates comply or explain. So for TSE, we are trying very hard to tell the Japanese corporations to follow the criteria. And in order to promote that, we just recently introduced the JPX Nikkei Index 400. This is a new index with a new concept, and the companies which comprise 400 will be the ones having a very efficient capital and manage the business with investors in mind. In short, the companies included in the index are those which can satisfy various requirements of a global investment. And in that, one of the most important index is ROE, stating that ROE is one of the most important metrics. And last year, we have also introduced Japanese version of the stewardship code. So we hope that these stewardship code and a corporate governance code would eventually promote more productive management.
Japan's stewardship code was introduced to help institutional investors, which manage the end investors fund, to have constructive engagement with investee companies so that return on investment and corporate governance will be improved on behalf of the investors. That was the aim of the stewardship code. Most of the institutional investors have agreed to the adoption of the stewardship code, and they can register their intention with the FSA. And among the Japanese companies' management, we want them to improve the management itself, and this can be conveyed through the dialogue from the investors. We have 7 fundamental principles. The 7 principles are, first of all, institutional investors should disclose policy to fulfill responsibility. Second, they should control conflict of interest. Third is they should monitor investee companies. And fourth, should have constructive dialogue with investee companies and solve problems. And fifth, they should disclose voting policy and voting results. And 6, make periodic reports to customers and beneficiaries. 7th, have in-depth knowledge on investees and take appropriate engagement with them. The opposite of this stewardship code is the corporate governance code. Last July, we introduced, together with the FSA, introduced a corporate governance code. There are 73 principles involved there. There are 3 stages, the 5 general principles, 30 principles, and 38 supplementary principles, total 73 items. And I'd like to touch on the general principles on. One is to secure the shareholders' right and equity. Second is appropriate cooperation with the stakeholders. Third is appropriate information disclosure and transparency. The fourth is responsibilities of the board. And 5 is dialogue with the shareholders. These are the 7 general principles. But all 73 principles apply only to TSE-listed first and second section companies, 2,100. And Mothers and Justak, which list emerging market companies, can adopt only 5 general principles. So the characteristics of the corporate governance are twofold. That is, one is principle-based approach without detailed rules. This is one approach, and the other is comply or explain approach. That is, in case of non-compliance, you have to explain the reasons why. So these are not the ordinary rules. There are no penalties either. It's up to the corporate management to comply with it or not. But if you don't comply with, they are obliged to give proper explanations. This is quite effective in the Japanese companies. Japanese management people think that they want to comply because it's rather difficult to explain why they are not complying. So this, although it was introduced only last year, but up to March this year, 2018 companies have submitted a corporate governance report. And out of that, 225 companies made a full compliance for all the items. This is the first year, but so I think it was rather difficult. But this was rather unexpected for me too. I'm not quite sure whether it is true or not. And out of 73 items, the companies who implemented more than 90% was 1/3 of the total companies. That is 1,359 companies. They said they will comply with more than 90% of the principles. So the companies who have to explain the reason of non-compliance was rather small, and only 7 to 8 items that they had to explain. Then what kind of principles or items are difficult to comply? About 1,000 companies, they said that the assessment of the effectiveness of the board, that is, the self-assessment, was rather difficult. According to the code that was introduced last year, companies who made this self-assessment of the effectiveness of the board was rather difficult. So roughly 1,000 companies had to were obliged to explain the reason why they're not doing. And since the introduction of last year at the shareholders meeting in June last year, the management system has been already determined. So to elect more than 2 outside directors, was explained by 829 companies. So these two items are the principles that had a high number of explanations. But the outside directors of two outside directors selection is rather difficult to implement this year, but the companies who have promised that they will try to implement it this year or at least by next year. And in recent months, I'm sure this item will go into the compliance very soon. More than two outside directors was implemented by only 20% of the listed companies, but in recent months it's increased to 60% of the companies. So this item will be quickly improved. Together with FSA and JPX, we have the council of the follow-up meeting together, and election as well as the dismissal of the CEO is a very difficult issue to tackle, but we are addressing that. And also how to dissolve the shareholding is another important difficult issue to tackle. So some companies may be resorting to follow this only in name only, but it is important to have an effective implementation of this corporate governance, and we will continue to follow the outcome of this principle. Since the collapse of bubble in 1991, we have gone through the last 2 decades. But under the growth strategy advocated by Abe administration, stewardship code and the corporate governance code were introduced, through which both investors and corporations are conscious of growth in their decision-making process. And I can see the very clear changes that they are undergoing, and they are rather going this change very rapidly. This change among the Japanese corporations, we have high expectation on these changes. So against the backdrop of a negative interest rate, both corporations and households have to face portfolio rebalancing, and also we have to consider the asset building for everybody in Japan. Last year, we introduced NYSA following ISA in the UK. We introduced NISA, and we introduced Junior NISA, ISA. But the parents as well as grandparents can make the investment exempt of the taxes. So as a Japanese government, they are trying hard to build the risk-free portfolios among them. We have many tools and measures to help them to do so. So we would like to repair the individuals' assets which experienced impairment through the introduction of negative interest rate. We would like to work hard to improve them. Thank you very much for your attention.
So foreign investors represent 30% of the shareholding, 60% of the trading. And in your corporate governance guides, general principles, one of the principles is to have a dialogue with shareholders. Is there anything that you believe Japanese corporations are doing in order to ensure they have the right kind of dialogue with the 30% of the shareholding of foreign investors?
In response to your question, company management are, of course, aware of the shareholders, not only of a foreign, but also of professional investors. There are more professional investors, so that each company, through their investor relations department, they try to meet with the investors. They try to have a one-on-one meeting. Some of them are conference style. They want to have a very positive way of having a dialogue. Therefore, not only tell the good thing about that company, but also share some weakness, something need to be improved, so that the management would like to talk to investors as to what management intend to do for future growth. So this is the really steps being taken by the management. Of course, domestically, we do have a one-on-one meeting with the domestic investors, but there are some open conferences when the settlement numbers are announced. And I think overall, much changes are being taken place right now.
Thank you. Let's open it up to the audience. I'd like to see if there's any questions that you'd like to ask. Right up here. Please state your name and also speak into the microphone so we can have the translation.
Yes, I'm Charlie Kimball with the Korea Center for International Finance. I'm wondering about the effect of negative interest rates on Japanese capital markets. In particular, are consumers saving more, or are they saving less? We'll say year to date. Are they investing more in the stock market because of negative interest rates? And what are corporations doing? Are they borrowing more because interest rates are so low? And might they be beginning to invest more in the stock market?
I think you asked about the impact of negative interest rate. This was the step that the BOJ took. And BOJ is expecting three results. One is they're hoping to lower the yield curve so that it would be easier to lower the borrowing, and that would enhance them to make an investment. Second is to rebalance the portfolio from the fixed income or deposit interest rate is so low. In fact, it is negative when you talked about the government bond. We are hoping that people can switch over to dividend. Some of the dividends are really paying 3%. So they are hoping the rebalancing of a portfolio taking place in Japan. So low-risk asset should be moved into a higher rewarding investment. Third is for interest rate gap between U.S. and Japan, especially the bigger gap is U.S. And by big gap, we can expect yen appreciation to slow down and be lower yen. These are the results anticipated by Bank of Japan, but thus far they have not found out the way they want. But it's been so soon. It was instituted in February 16, so it may take some more time. But even then, for the moment, we have not seen any fruitful results. That is because, speaking of individual investors, even the bank account is negative interest. They don't really become aware of it. So people are not so well versed in the financial affairs, so that they do not find any other way to put their money other than the bank deposit. So we should really introduce stock or mutual fund. Many of them have not dealt with for individuals who are not really experienced using them. So even though they suffer negative interest rate, indeed the bank deposit is increasing. So Japanese bank balance is May last year and May of this year, 4.5 increase of a bank deposit. This is really a bit difficult to explain, but indicates that the Japanese citizens are chasing after low risk. That's the reason that we have not seen the results. You also asked about the corporations. Corporations had already enjoyed for very, very low interest loan. And yet investment opportunities are not being easily found within the Japanese market. So even though loan is at a lower rate, companies cannot find too many investment opportunities. So that's the reason that investment itself is slower. On the other hand, though, corporations do have some expert in their financial department. So for a negative interest rate environment, they are trying to fixed income financing by issuing corporate bonds so that they can assure having a very low rate funding going forward. Also, some corporations are buying back their own shares. So for corporations, they do have some expertise, so they can utilize the opportunity somewhat. So some of them are thinking of switching over if you increase the equity by buying back, that may increase the ROE, and therefore it is plus for corporations. So I hope that would happen, but then overall it hasn't been that creative at the moment. Did I respond to your question?
On behalf of the Japan Society, I'd like to also ask all of you to welcome me, join me in thanking Kiyota-san. Thank you very much.